The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, and it is definitely a very interesting day thanks to our hosts earlier on. Of course, you've got great programming coming up all day today and going all the way through to 6 o'clock. And you've got your swim lesson with Think or Swim. You've got Steve Rhodes. You've got Dave White. You've got Tom O'Brien coming back. And then you've got Andy Hecht. Hey, this is the day. Now, what's going on? Couple of things. I was going to do this Tuesday, but it was just a little difficult emotionally, but I'm going to do it today. We lost two tigers. That is two tiger family members. These folks that have been in the den a long time ago when it all started. And one of them, in fact, has just recently been making comments right here in the den. And all I can say is that within the context of, how can I put it? Within the context of what they offered to us and what we were able to offer to them, that is exactly what the den is all about. That's exactly what we tried to institute here. They were fantastic members. They offered a lot. Both spiritually and in practicality in terms of what they were trading, etc. And it really, both came as a big surprise. One perhaps more than the other, but really, it is a family. And we get emails from people around the world saying, "Hey, we listen to you and listen to all the hosts, and it's just tremendous information." So with that, I just want to say, rest in peace, Gigi and Mitch. We will miss you, and thank you for what you offered us and gave us. Just coincidentally, I also had an email from someone's wife who mentioned that someone that I knew very, very well, hadn't seen him for a long time, had passed away. So this has been a pretty difficult week. Now, let's get on to the market. The Dow's down 167 at 17,976. The S&P is down 19 at 2119. The comp index is, at this particular point, it's down 52 at 5186. Let me just do this with the charts. Actually, let me just show you. This is the E-mini because I want to get this out the way because I want to do the charts as we talk because there are a bunch of things going on. You see this down Chapman wave inside wedge down trend line, this dashed line. We went right there, and now the stochastic is trying to turn up at 16%. It's just trying. I say trying because it's not really happening with force, but it is trying, and the MACD is flattening out. So I'm suspecting a couple of things. Oh, before I go any further, my email, the Traders Corner that I sent out today, for some reason I sent out yesterday's, and I went off to the gym, came back, and I saw messages saying, "Hey, where's the Traders Corner?" And I sent out the Traders Corner. So please check your update. And what I recommended was number 16. That's the only change, is that number 16, you take some profits, just a little bit of profit, keep the core position, take something off, reward yourself a 16 to 20% gain in just a couple of days. Hey, you can't complain about that. So that's what I am recommending. So please, if you check out my Traders Corner, updated, I don't know why I did that, but I did it by mistake. I sent it out. I'll review everything again, of course, tomorrow morning. Now, let's do this. The E-mini is down 19. This is very important because that low that was made on the 15th of September, 2107.75, we're looking at that, and I'm saying, hey, 2107.75 was the low we made this morning. 2100 is the low, the very important low that was made on the 12th of September. So this is going to be very important. I'll just show this 10-minute chart here. It's trying to sustain some kind of some downside force. There are a couple of trend lines, and all I can say is that we're looking at two, and if the E-mini starts to trade under 2110.50, it's liable to retest the low of 2107.75. But if it's able just to scratch a little bit, it had a nice pop-up earlier. That was just the initial pop-up, a kind of a test. Most importantly, what it needs to do is to go above 2114.74. Let's call it 2115, and it needs to do it right within the next segment or two that we're on. And then if it does that, a couple of things are going to go on. I'll talk about that. We'll have time as we move on. Look, the weekly chart is real close to giving a sell, not just a sell signal that we've already got, but a sell mode indication. We're going to watch that real closely tomorrow at 4 o'clock. The 120-minute chart is giving an indication, yes, trying to form some kind of a short-term base. And the monthly chart, can't talk about that, is still making it, made a peak B. Just to real quickly, for those of you who are interested in my Chapman Wave 5s, what we've done is we've gone, I'd circled this. It went to a 5 the other day at 18,399, the 120-minute chart. I believe that we've now made 3 down, and we're going to have a bit of a pop-up for a 4, and then we'll get a 5 down. That's based on this particular technique. The arch formation says that normally when you get the third arch, that's the one that can often go below the key support level, in this case 17,992. Turns out we've already done that this morning because the low is 17,959. Then you have a bounce, and then we should have a little bit of a test, and that's going to be key because it's from this level that you can have a stronger bounce. I'm still calling it a bounce because we're in sell modes in the daily, but there's a real good chance that we are getting to some very short-term overbought situation. Oversold situation, and that there should be some kind of a bounce. And let me just check. Yeah, and look at this. The 120-minute chart has gone to a leg E in the VIX index, 120 minutes. It went to 1795 above the peak D. I'm suspecting that we could be pulling back. That's why I'm saying to subscribers, please quickly check out my I don't have to do it quickly. That's it. And I have one signal that says that tomorrow the Dow should open a little lower before it has a decent rally. So, this is such a fascinating period. I don't even want to waste time on the politics of it. Now, let's run these down. So you've got that. You've got the S&P SPX.X broke to a new low in the daily, broke to a new low in the weekly. So this is confirming that the S&P is in now sell mode. The sell mode doesn't mean to say, hey, now it's all over. Now you're going down. This is just an expression of where you are. Make sure that we make a distinction. I can get a buy signal from a sell mode, right? Because the sell mode culminates in a buy. I'm not saying any of that. I'm saying the key support is the monthly at 21. I believe it's somewhere around 21.17, around there. And we should have a little bit of a bounce here. That's all, oversold bounce. All right, here we go. I want to look at the IWM quickly. IWM, let me check. Look at the time. I like to do this in the first segment. All right. IWM hasn't made a new low. It's acting very poorly. The QQQs, remember, we had that signal, fantastic signal yesterday, went from a sell signal to a sell mode almost in one day, down at 116.32 after 119.48 high. Let me just run the other numbers. Crude oil is down 50 cents at 49.67. You've got gold up $5 at 12.59, and the dollar is down just a little bit. When I last looked at it, it's down 30 cents at 97.67. I want to talk about those when we get back, because the dollar is in a leg that says, hey, got to watch this real closely. How much will it pull back? Or is this a really strong signal? I'll talk about that when I get back. Basil Chapman, Tiger Technicians Hour. Dow's down 160.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focus Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Started leg B in the 10-minute chart. This is very important here. And the reason why I went through the whole litany in the VIX index is that I suspected that we would see the VIX. Oops, let me just do this over again. That the VIX drop after such a spectacular move somewhat. And look at this, A, B, C, D, A, B, C, D. Let me just show you Chapman Wave methodology. Here we go. What do you look for? You look for 4 higher peaks at least. And here you go, A, B. This is the 10-minute chart of the VIX, D, E. And then it goes A, B, C, D. All right, so we've got that. Now the VIX can start to pull back a bit. And the E-mini, where is it now? Yep, it's just made leg B. It's really a struggle because the selling is quite intense. All right, let's get back to our story here. One of the things that I was looking for, why we wanted to add to the short side, is because we waited patiently in the Chapman Wave methodology. You look for 4 higher peaks. When you get to peak D, other things can happen. Yes, it could recycle higher, but that's a different context because the objective is to get you, hopefully, from the low bar to the 4th highest peak. And here we are at 119.48, finally in the QQQ series on the 1st of October. And then all of a sudden we get a confirmation the next day with a huge down candle, and then it starts to pull back. And now you've got a low today in the 115s. It goes to 115.94. I mean, that's 3.5 points. That's big because you've not had a move to the downside. You've had moves to the upside like that, but nothing to the downside. What's important is the QQQ weekly chart is making a leg E. So we'll see tomorrow at 4 o'clock whether or not if there is a potential next week for a peak E, and then if the MACD starts to turn down, it hasn't crossed negative yet. It's turned down, but it hasn't crossed negative. That's going to be important. And the other thing is if the stochastic remains in the 93%, going short in this particular area is kind of tough to do sometimes because the weekly chart is more powerful than the daily. But the daily sometimes can be the rudder if it's strong enough on the upside or the downside to really impact the weekly. So let's see what happens. I can just suggest to you that if the QQQs close underneath 116.50, that's actually where they are now, 116.52. I got to give it a little room. Let's say 116.70. Tomorrow at at 4 o'clock Eastern time, then I'm going to have to say sell signal is now in place not yet a sell mode. In the Dow, let me show you exactly what's going on. INDU. If you look at the Dow has now made a leg B to the downside in the weekly charts. It's in a sell mode. MACD is lousy. Stochastic is poor at 66%. Most importantly, what we're looking at is that in the arch formation, we've gone below the 17,992 level. That means, based on the Chapman wave methodology, there needs, first of all, to be a close above 1792 today or tomorrow at maximum. I'm not giving it 3 days, it's 2 days. If it does that, you can you can have a bounce, but that bounce will take you to previous resistance. Well, the resistance was that wedge formation that we spoke about in great detail the other day, and that is now right on the 9-period exponential moving average of 18,173, number two. Number three is, within this particular formation, the arch that's unfolding, well, now let me finish off the day. The daily technicals are very, very weak. And that says anything that we see right now is just going to be an oversold bounce. And the earnings coming out, maybe a couple of earnings reports do help the market a little bit. Most importantly, what I'm looking at is within the context of this formation, you've completed the arch. I can take this and I can put it all the way down. And yes, now you can get another arch formation. It's possible to get. And that arch formation won't be quite as high, but it'll be something like that, maybe going towards the 18,280s, if it can do that at all. But if within 2 days the Dow fails to close above 17,992 and closes below it, it says that, yeah, the best rally you can do is a bounce to those levels. However, if it closes above today and tomorrow, then you can go a little higher. You can make another arch formation, which can go to what was previous resistance, even the 18,280s to 18,310s. All right, that's the Dow. Real quickly, I'll do this SPX.X because I want to just show the formations. The E-mini has gone below as well, and then the S&P cash. It's broken all that. It's made the arch formation. There it is, what I call the lowercase. Remember, I showed you the chart pattern on my CD introducing the Chapman wave methodology, and you've gone to a leg B in the weekly chart. This is tough stuff. But the monthly chart in both the Dow and the S&P still look excellent. Right now, let's go to the QQQ. I showed that earlier. I just want to show the monthly chart is still very strong. Weekly chart is actually very strong, but it is hinting that it can go down a little bit more. Now, even more important than that is that within the context of the QQQs, I'll give you 118.20 in the ups, 117.84 to 118.20 maximum upside at this point, but the downside 115.20 could be hit, and it could be hit fairly soon. Now, I need to go to the dollar. Look at this. The dollar is in an alternate count right now. And that alternate count says, just want to check something out. I had a question about it. Yeah, that is a D in the 2-minute chart that I was showing. That's number one. That's what you want. I'd love now above the 200-period moving average of the 2-minute. I'd like it to be holding here, maybe pull back just a tad, and I'd love to see a test of the high that was made right there at 924 of 2120, and we're at 2117 at this particular point. We'll see what happens. Okay, let's continue. In the dollar, so many. Let me just do this. There's a left side, right side price time match. What does that mean? It means that in my methodology, there's a particular way of measuring from one side to the other. If you're making a cup or you're making an arch formation, and you have to pick the trough. In this case, the trough looked like it would not appear at all to be correct. So I moved it to the high that was made from the 823 high of 97.57 down to the bottom in August, and then to the doji high of the 31st of August at 96.25. I chose that as a midpoint. Well, I chose it as a midpoint first over here, and that made it within 1 day. It made it there within 1 day with a day to spare. And that was the high of 96.52. Now you've got the dollar, you've got a Chapman wave inside wedge, and that wedge said that by the 7th of October, this is a daily chart, there should be a test of the 97.57 level. Well, where did we go? We just missed it. We went to 97.19, and the following day pulled back, and then boom, 3 days ago we spiked right above it, and now we're in a leg F/B. The MACD is so strong, and the stochastic at this point at 92.11 is so strong. I don't think it's going to pull back. I think this is, in fact, a B in that we're going to pull back, and this becomes a Chapman Wave instant restart. Wow, all these techniques, I haven't discussed many of them for ages. This is the Chapman Wave PD instant restart, and you could get yourself another little plus sign over there, and that could be the start of a new move to the upside. And you know, the relationship of the dollar to the market, we've seen that it's fluctuated. Most of the time when the dollar is up, the market is up, being up, but the market's been up for 6.5 years. So I'm not sure I can get a direct correlation. All I can say is that this action right now on a weekly basis is still, even though it's leg D, I'm liking the way the dollar's acting. I really do. And the monthly chart has improved so much that I'm looking at this. I drew it a long time ago, that those two U-shaped patterns right next to one another, the double cup. I think this is very positive. I'll be back. Now the Dow's only up. Let me show you the chart right here. The Dow is up, and there it is.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, we're back. So let's just go through this again. I think I might have missed out showing you the chart. Here's the chart now of the 2 minutes, and it's got a high of 21.20 as a goal. It's 21.19 right now, and that should be there. Well, it sort of should have been there already, and it's taking a little time, but hopefully it'll get there. Now, one of the reasons why I thought about there could be an oversold rally was because of General Electric. Look, General Electric was trying to form a base, and it had a couple of good candles. It was the one that was saying, watch out, we've got a good few hundred points to go down. One of the reasons there, it was General Electric, General Electric is just trying to form a base. Nothing great, but there's that trend line in the weekly chart that it needs to hold. And said, hey, there could be a little bit of a rally today. We'll see what happens by the close. Amazon was the other one that said to me, between the QQQ waiting for that leg D, we had already got a peak F top in place at 847.2 based that's both the Chapman wave peak F with the chance that you would get a Chapman wave 5. That's not Elliott wave, that's Chapman wave 5. And we got that. That's a confirmation right now in the daily. The weekly is just, I'm saying that's what I've got. I don't know if it's going to work out, but that's what we have. We didn't short it. I want you to short it immediately. That the very next day at the opening, that would have been, the high was 847.21. And we wanted to short at the opening, which would be 845.79 with a very tight stop. And I said, wait, why tie up that kind of money? We've got other fabulous potential shorts that we could use, and even inverse that we could use for the upside based on the short side of the ETF. So we didn't. So there were a whole bunch of things. And the VIX index. The VIX index looked to me like it was really making some kind of, at least a bottom of importance, even if it was just short term. All right, now questions. FXI, good question was, what was the question exactly, the wording? FXI, EM, emerging market, wave count. Oh, wave count. This is very interesting because within the wave count, I had a spike to the upside. You remember I said it's acting quite well, but I didn't really want to. I don't like these, what I call, I haven't seen the show for ages, Bart Simpson hairstyle, those spikes to the upside. Basically, what I'm looking at is that I wanted to see something like this, and I would have put a plus sign, not the up arrow. I'm putting the up arrow now because it's obvious that that's what it was. ABC, double top C1, double top C2, slightly lower, and then you get your D, just the way the Qs did it. And it did it on the same day. So the FXI has now completed its move. I'd say be careful. That is the iShares FTSE China 25 ETF. Just be real careful. That's number one. Number two is within the weekly chart, yeah, the technicals are still good, although they're both sloping down. They haven't really crossed negative yet. But this very big ugly candle is saying to me that maybe China, at least for this particular period, could be making an oval formation, and we could just chop around for a few weeks unless, and this is really important, there you are, unless at 37.13, up down 70 cents right now, unless this low right here, the low of the week of the 26th of August at 36.67, if that's taken out, watch out below. I think then China starts to move down, and that monthly chart, which has made a leg B, will be making, no, it's still a leg B. I have to wait all the way through to November before I can say that it's making a peak B. But that's what I'm saying right now. It's acting well, but I would not be buying it. I'm not even sure that I'd be shorting it right now. Maybe that's wrong to say. I just think China could hold up a little bit better because it's the weekly chart is in an area that says it's like a rectangle or an oval formation, and there is support in the 36s. If that doesn't hold, then it's tough. It's going to be going down. That was question. EM right here, EM was acting quite well. It made that, I don't know what that wave count is. Every once in a while, it's really once in a while, I get a wave count that is just so off the charts. I have no idea what it is. It's a very choppy ABC. Oh, it is a D. Oh, I'm sorry. I can do it. But this is in retrospect. If I was doing it in real time, which I did, which I have, I would have been flummoxed. I would have had to go back to the chart and say, no, I got to redo this. I'm not sure that I'm right. It's a very whipsawish. This is an A. I would have been correct in that F right there, but I would have been wrong when it spiked higher. No, it could have been right in the G as well. But how do you count for this? This is a B, a C. This is where it's complicated. This is where I'm saying the Chapman wave methodology works beautifully in retrospect. At the time that it's working, all I was correct in saying is that it's a real choppy action, acting quite well, and it's still holding EEM, the iShares Emerging Market Index. Next thing, so let me give you the parameters. In the EEM, a close below 35.50 in the next week, bad. The close above 37.35 just confirms to me, it's at 36.69 right now, confirms to me that it's just choppy sideways. And I'm going to leave it at that for now. I have no position in it. It's easy for me just to have a position to say, I'm going to leave it. Now, someone will ask, could I just check on this 2-minute chart? Yeah, this is the one. It's gone to an recycled F/B. MACD is good. Stochastic's good. That's the 2-minute chart. The 10-minute chart. Oh, look at that. Isn't that nice? I drew that in. This is what you saw at the very beginning of the show. I drew the left side, right side, price time match, and I said, did I say it? At 12 by 12.10, there should be a test of the high of 21.21. I think, didn't I mention that? Anyway, so 21, we've already got that. We've got 21.20.50, so we're almost there. Okay, so that's good action so far. All right, that was questions. Next question I had was sliding down. Adam, XPO. You know, I don't think I've looked at the XPO in a long time. I don't even think I've got it notated. No, I haven't. The XPO is the XPO Logistics Inc. XPO. Oh no, I haven't. I've never looked at XPO. Sorry, I got it confused with XOP. XPO is looking AB. You know, this is a tough one. What is the question? Oh, this is the logistics trucking. Okay, very good. And USAK, I have looked at USAK. I think I might even have it notated. USAK, do not have it. I used to have it notated. Oh, that doesn't look good at all. So let me go back to the XPO. XPO right now is trading at 35.01, down $1.34. I'm just going to make the recommendation that this is a peak A, B, C, D, E. Peak E right there. I would not be buying it. Just have patience. My eye visually says, based on the technicals, that at 35.01, if it takes out the low of 34.10 to 33.90, that support level, there's a good chance that over the next 2-3 weeks, it's going to test this 200 or close to the 200-period moving average of 31.72. It has to within the next 2 days. It really has no choice but to go above 36.59, 36.60. I'm sorry, is that a 35? No, that is 36.60, way above the 9-period moving average. So yeah, just step aside. It's telling me that it's rolling over a little bit. Just be real careful. If you don't mind, I just need to do this for 1 second. I need to check here. Yeah, okay. So that's good. Now what I'm going to do is this. Within the context of the markets, I mentioned the IYR the other day, and Sarah wants to know IYR. Oh, so this IYR, which is the REITs, the iShares Dow Jones U.S. Real Estate Index Trust. This is the one that has commercial real estate. SPG, Simon Properties, it's taken out now. It's taken out some of them. It's been reconfigured, so I don't give it. This is not the accurate, a comprehensive look at the components. But in the meantime, back at the range, I'd just be real careful. I don't think I'd buy it. What is the wave? What leg? The IYR. Wait, 2 questions. Oh, and the XLU. The IYR has made a trough G and it's bouncing. I'm only calling it a bounce. I don't think it's at 77.44. We'll talk about it in a moment. Dow's down 124, S&P's down 14. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Let's see. Where was I here? Let me just dive. I've answered so many questions, doing so many things here. Oh, that was the IYR. Yeah. So the IYR. You see this chart here? See the way D from peak D in the weekly come down so sharply, and I really think that this is getting closer to peak F in the monthly. I'm not sure. This is not a brand new A, but I'm looking at it, and yeah. So what I think I'm going to do is to say to you, this one I don't like as much as the next question, which was the XLU. Was that the same person, different person? Yep, it's the same person, Sarah. The XLU has a little bit different chart, and it's the utilities, S&P Select Utilities, trading at 48,801. It's up 57 cents. Here, look at that chart. Basically, what I'm looking at is... I was going to say take a little nibble. I don't think I want to mess around. I might be missing a great opportunity. I tell you what I would do. If you're a shorter-term trader, at $48, I take a very small position on the XLU, but I would absolutely make sure that I've got a stop. I wouldn't even put it under today's low. It's got to work right now. At $48, you buy it at $48, and the 9-period moving average is 47.78. Make yourself a stop of 30 cents, less than 1%. Because why? If this is going to move, the third green candle tomorrow is really important. And if it is a green candle tomorrow, then 48.59 is the 200-period exponential moving average resistance. But that's not the issue. This W formation in the stochastic is one of the patterns that I follow for years and years. When it succeeds, it's like the double top M formation. When it succeeds, it can have a nice move to the upside. Not the start of a major move, but a start of a move that takes you, in this case, it could take you all the way to 49.07, the 9-period exponential moving average. So, yeah, I'm going to say, I wasn't going to, but now that I'm thinking about it, I'm going to say in the XLU, the S&P Select Utility Spider Fund, you can take a small position here. It's a trading position. Why? Because all these little 1 and 2 and 3% add up after a period, and you've got yourself a stop of less than 1%. So you've got less than 1% with the potential for 1.5 points. Yeah, 1.5, maybe 2 points, 2% to the upside. All right. Next thing is we want to go to Delta. Good question. The airlines had some nice moves, and then they gave some of it back. I don't particularly like Delta right now out of the airlines. I don't want to go through them all. I'm just saying that, American Airlines looks terrible. Let's look at the one that usually holds better than most of the others, Love. Love is better. If you're going to choose between the two, LUV is the one that is holding better, has a much better pattern. Actually, looks like the dollar pattern in the monthly. I like it. All I'm going to say to you is don't don't get carried away. If you do have, if you're wanting something in the airlines because you think crude oil is not going to impact them, I happen to be really nervous about the airlines in this market. I think we're in a little mini recession. It's not quite noticeable, although I spoke to someone who has a bond fund, has had it for a long time. Is perhaps I didn't know it at the time, but they are one of the top bond fund people in the country. I know him from a completely different aspect, more as a friend than anything else, and he thinks rates are going up. But that's what he's thinking. Doesn't mean to say he has actual evidence. He just thinks that now they've got to raise rates, and they'll do it in December. But that kind of says that the market could take a little while to digest it. At the same time, that it's having this whole thing about the election. So we'll see exactly what happens. Now, here's another thing. We're looking, a question came up. Let me just double check here. Question came up. Oh, there we go. So Bob wants to know about CLF. CLF is Cliff Industries, Cliff Natural Resources. You know, I always have a tough time with Cliff. I missed it on the way up, that massive move on the way up back in 2010 and 11. I kept following it. We might have had it for a minute or two, but I don't think we ever had really. All I'm going to say is that the way I'm looking at it right now, I would not be buying it. I think it's stuck in a range. And believe me, if it takes out in the arch formation, the lowercase h formation, if it takes out 518, CLF trading at 547, down 26, I could be wrong. You use your own homework. I'm just saying that I don't know. Maybe you've got something. Same group as Vail. Oh, same group as Vail. All right, let me look at Vail. Valet. A, B, C, D, just made a perfect E, pulling back. I'm going to stay away from this. I have no opinion. I think they look weak, but they have run up. No, not my forte right now in this particular pattern, because I need to see how it pulls back to. If it goes to 540 and holds, and then starts another rally, speak to me again in about 3 days' time if that happens. Then I've got some evidence. USO, question about USO. USO, this is, of course, the United States Oil Fund. Peak E pulls back just modestly. Leg B in the weekly. Let me have a look at this. Oh, yeah. There's the H pattern. I'm going to draw this in. So all I'm expecting from oil is that you're going to get some kind of an H pattern that goes to a lowercase m pattern. What does it mean? I'll show you in a minute what it means. And that pattern goes like that, and then we'll see what happens. So, yeah, it's holding very well right now. I do think that there's a cap in USO between 12.30 and 12.73. If it goes to $13, I'm going to have to reassess everything. But at this particular point, that's what I'm saying. All right. So here we go. What was that? When would you short? I don't see this as a short right now. I mean, it was decimated going into the low of 2016, January, February. I just think it's the sideways trading band. And we saw that. You remember gold went sideways before it broke down. That's all I can say. Shorting, I think it's a tough one to short because once they start propping it up, it means it has a base. That's all. It doesn't mean to say you can't make some money, but I just think that as long as there's a base, I want things that don't have a base. Okay, let me see a question about this. The 2-minute chart. Yeah, it made a peak F, and now at peak F is where you do expect time and price. I'm watching the E-mini in the 2-minute. Let me just see where we are in the 10-minute, because I think that was going to our right side. Let me just check this out. Question in the den, or at least a statement and then by JB. Yeah, this is leg B. It's probably going to be a peak B. It's holding quite well. I do think that the selling was just too intense and that we could see some further upside action. Oh, okay. So now we've got ourselves a minute to go before the next break and then the final segment. Now I want to do this. I want to do a little wrap up here on what I'm looking at for next week. And I want to do that because there's a good chance I'm not going to be able to make it tomorrow. Just a couple of things are right there that just coincided on my show. There's nothing I could do about it. So let's do this. I'm looking at the I'm looking at the EUR USD. I want you to do those currencies. EUR USD. This is a candle that says I'm still going lower, but just on the short term, I could have a little bit of a bounce, and I need to look at the 120-minute chart. The 120-minute chart says EUR USD currency pair, euro-dollar currency pair in leg A in the 120-minute chart. The technicals are quite good, and therefore I want to look at the USD as we go off to USD JPY. Yeah, that's in leg C. This is an overlapping web. I need to talk about that. Leg C, I'll be right back. Talk about the...
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special one-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 one-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. So this is what we're looking at. Dow's down 122. And there's that peak B that's been made, taking a little time, and then we'll see if it's able, if it clears it by 1 o'clock. If it clears 2121, let's go to 2122. It's at 2118 right now. That'll be really positive action because it'll start to increase the chances of giving back a lot of the losses and towards the end of the day. Pullback below 21, I put it at 2115, 3 points lower. Says, don't be fooled. This is not a good market. Look at high-grade copper. This is almost like an A to B equals C to D to the downside. It is, in fact, even more. And this is a leg B to the downside, arch formation. I talk about peak Ds all the time from the low it was made in copper on the 12th of September, 2.06. Look what happened. You go peak A, peak B, peak C, peak D. What do we expect at D? Other things can happen. And what did happen? Plop, bounce, kaplop. And the stochastic and MACD, right shoulder failure right there, very ugly. and looks like it's going to hit this trend line tested at 2.09. Not good for copper. Okay, a couple of things that I'm looking at now. Within the Dow, INDU, patterns that I'm looking at, let me just go to this. In fact, this will make it a little clearer. Right here, daily. You see this, make it simple? Look at this, a beautiful arch formation. It's taken lowercase h. There's a chance that you're going to get some kind of an lowercase m formation, but I can just tell you, make it real clear. So far, we're above 17,992. The close above it says, yes, you can rally. You can rally even to the previous peak. In this case, it's all the way at 18,399, but that's really not the issue. The issue is it says it can bounce to key upside resistance points, and that's the 9-period moving average of 18,176, 60 points higher. Then you've got the 20-period exponential moving average at 18,221. But my pattern on the 120-minute chart is there's just a chance that we could have a little bounce over the between today and tomorrow, and that gives you 4, and then maybe Monday, because bad news and everything comes in, and whoops, we go all the way back to the downside. So I'm watching that, and that's going to be watched real closely. We are short. We've added to the short positions. We've got many shorts working very well. The best short so far, on the long side, we've got a huge gain in one of the volatility ETNs. The best one we've got so far is Ulta, shorted it at 270, just over 270, and up 23 cents. Shouldn't you see? You can't talk. You got to be looking at these things. We shorted at 270. It went all the way down to 234, and then something's happened today. Very good news. All right, well, 255, we're out. So I should have said Ulta was one of our better shorts. We shorted it at Ulta Salon at 270.11, 255.11 was the stop. Didn't expect it to be hit today. Couple up. We got stopped there for a very nice gain, but not as nice as it was at 234. All right, that happens. This is going to be very interesting because these key stocks, the ones that have had the spectacular moves to the upside, many of them have got hammered. And I'm saying Amazon, I'm looking at this and it could come down, but it's still going to be one of the better stocks looking at it on the month going into the season, the holiday season. So I don't see it as a short, and I think that, well, we're going to be looking at what happens in this market correction and when can the next new high be made in the Dow and the S&P, and that's really the big question. So I'm going to wrap this up. You're going to go to your swim lesson now. You got classes all day. And this is very interesting that we had to take profits in the Ultra Salon. Only 15 points. It was actually up 30-something points at one stage. That's what happens with these things. Now, please remember, for my subscribers, I did send out an update to my newsletter because I sent yesterday's by mistake. So when I got back from the gym at about 9:40 or something like that, I had to simply send out the regular one today. Please check it out. Folks, have a great day and good luck with your trade. See you soon.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.